Traders at Access Bank say investor appetite for bonds remains muted. On the T-bill side, the market is expected to continue to trade bullish in line with prevailing liquidity conditions next week. Oladimeji Obasa, the team member at Treasury and Financial Asset Management at Access Bank, joins me now as we look at the sentiments driving the fixed income and FX markets here in Nigeria. Thank you so much for your time today, Oladimeji. And let me get your take first. Let's do a run through on what we've seen play out this week in terms of the fixed income and FX market and what's been driving sentiments for investors.
Good morning. Thank you for having me. Generally, this week we've seen the market be quiet on the fixed income side, with a lot of interest coming out here and there. However, towards the end of the week, that's yesterday's trading session as well as today's trading session, more importantly, we've seen a lot of bullish sentiments come into the market, particularly on the shorter end of the curve for shorter dated instruments such as the OMO bills and the shorter dated bonds.
All right, then we had some news flow from the government around the approved borrowing plans from the National Assembly. You know, how's the market digesting that, especially since we're looking at the budget and the Eurobond settlement here?
Yeah, so there's some news, like you said, that the DMO will be looking to, or the country will be looking to tap into the international markets for Eurobonds. On the local side, we still have the auction calendar to work with. Overall, the market has not necessarily reacted to that, particularly on the local side. On the Eurobond side, however, we've seen some bullish sentiments for that news. Market has just been trading more in line with global macro trends. Just on the Eurobond side. However, on the local side, what we've just seen is the regular trading this week has been quiet in relative terms compared to previous weeks. We had the auction this week, so not much has happened afterwards.
Yeah, but what's also driving that cautious sentiment in the fixed income space here? We've seen that investor appetite for bonds still remains muted there, despite the improved offers that we've seen across the mid-tenor papers.
Yeah, so where the levels where bonds are right now, there seems to be some resistance. We've broken the 16% handle comfortably. We're now trading around 15.8% on average on the mid-tenor bonds. There seems to be some sort of resistance at those levels. We, however, are still bullish. We see that the fundamentals for the country seem strong. There's still a lot of interest for bonds at this time. It's just about the levels where they are currently trading. Once the momentum builds up, it's likely that we break the 15.5% handle and likely trade lower than that in the coming weeks.
Interesting you mentioned that, because I was looking at the February 2031 and May 31 bonds, looking at where they are right now, and looking at the levels, like you rightly mentioned. Do you think this presents an attractive entry point, or is it more still the market still pricing in policy risk?
So the market is still trying to price in the different policies that we are hearing and the expectation going into next year. We've had a very significant rally this year, trading as high as 22.5% all the way down to the levels that we are now at 15.8 levels. So there's still a lot of that cautiousness that we have amongst investors. Coming in at these levels might seem unattractive when you look at it in relation to where bonds have traded this year. However, the outlook still remains very positive. So we just will continue to watch to see how that plays out and where investors are willing to trade the bonds to.
Yeah, and for the T-bills, though, looking at what we're seeing in terms of the bullish run that we're seeing here, supported by the liquidity that's playing out, how sustainable do you think this momentum is going into next week?
Yeah, we see that the Treasury bills market will continue to remain bullish. One is the liquidity. Second is the reduction in supply from the DMO side. Notably, they undersold at the last NTB auction. We also have heard news that there were some OMO private placements that matured today, for which institutional investors, particularly internationals, are looking to roll over into short-term money market instruments. So overall, on the shorter end of the curve, we see a lot of interest, and that has caused strong bullish demand, particularly today. and we expect that that would extend into next week.
Yeah, but very quickly, just what's your short-term outlook for the T-bills and bond space? Are we going to see more of a consolidation play out as we close out to Q4, or is it a correction or continued divergence? Very quickly.
So very quickly, what we see is continued bullish sentiments. All the indicators point to reduction in rates from the MPC. We expect that they would cut rates further. The market is liquid right now, and the fundamental outlook for Nigeria going into next year is very positive. So overall, for the rest of Q4, we expect the market to remain bullish.
Bullish market there, but from Oladimeji Obasa, a team member, Treasury and Financial Asset Management at Access Bank.